So I am before you get to the Gilead exit. So just on the tip between Charlotte and Huntersville. I'm going to share my screen in just a moment here and we are going to get started. But before I do that, I'm going to take a sip of something. You go ahead too. Take a sip of something. Alrighty. Just want to make sure you guys are not hearing any feedback or anything because I've got quite a few things going at one time. And I am the host and the moderator. Okay. So I'm like manning like all of the controls in the background, talking to you and paying attention to the chat. Just making sure I have all of my screens set up. All right. So I think everybody is in the room and we are going to get started. Alrighty. So welcome again. Again, please put yourself on Do Not Disturb. Find the chat box. Find the raise your hand feature. If you want to raise your hand, if you want to say something, I'm watching the chat and I'm keeping a lookout for your questions. What you'll need for this class, for this webinar, is an open mind, a comfy, quiet place to sit, a notepad and a pen, and a beverage of your choice. Now, one thing to keep in mind is that what's in your cup is your business and what's in my cup is my business, okay? Just saying. Alrighty, so hopefully you have all of those things. Again, I am Connie Ward. This is just a little bit about me, a little bit about my background. If you can give me a thumbs up in the chat to let me know that you can see my screen. Okay, I just want to make sure that everybody is good. You can still see me. You can still see my screen. Here you see my two assistants, BB and Cece over here on the right. I am a cat lady. I am an empty nester of two adult sons and officially a cat lady. So once you cross over a certain age, it's true. You become a cat lady. I love my kitties. They might pop by and say hi. Don't be afraid. They're friendly. And I've been licensed since 1997. So I've been around the world and I have experienced all the things pertaining to real estate. I've been a part of two of the most historical markets, the crash and the boom. So the crash in the early 2000s, 2007, 8, 9, and then the boom that we had during COVID. So I have a wealth of insight and wisdom and knowledge because I've been in different types of markets and I've done many things in the real estate space and I participated in hundreds of real estate transactions, okay, in some capacity, whether it's on the finance side, whether it's on the commercial side, the commercial property management side, general brokerage, new home sales. I've done pretty much everything over my 28 years of being a real estate licensee. Okay, so I'm an expert in all things first time home buyer and down payment assistance. I know it like the back of my hand and I know how to get the things done that we need to get done, especially in this current market. Alrighty. So again, I'm licensed in both North and South Carolina. So we can assist you in either state. So we have some people that are bouncing between states, not quite sure because the Charlotte Metro is in close proximity to the South Carolina line. So whatever state you are buying in, we got you. Okay. Alrighty, here is my team. Okay, I have two associate brokers on my team. So between the three of us and our transaction coordinator, we can take care of everything you need. Alrighty. Now, before we get into the meat and potatoes of this webinar, I just want to take a moment and pause and tell you to stop. Anything you say can and will be used against you in a negotiating setting if I or we, my team, are not representing you. What does all of that mean? Basically, it means don't tell me anything that's personal and confidential about your unique situation until you've decided that maybe I'm your jam and you want to partner with me as a real estate agent. Because guess what? I don't have to keep that information confidential. And that's with any real estate agent online, in person. I know we like to do a lot of things online. Sometimes we click buttons and we press things, and then before we know it, we're on the phone with someone who's asking us our deep, dark secrets. Don't share those things, okay? We don't need to know about your money or your motivation until we actually have formed a partnership. And there's some things that we are required to provide you with as a consumer protection that are in your best interest, okay? No, we don't go out blabbing your personal information to the general public. But let's just say hypothetically, you told me you got, an inheritance. You have all this money, and then you decide you don't want to work with me, and you come into my listing with another agent, and you're trying to haggle. And I'm like, I remember this person. Aunt Susie left them a ton of money. We're not negotiating. We're gonna, not gonna give in on anything because I know how many coins you have, right? So you don't want to tell us those types of things. That's just like an exaggerated example. Alrighty. So anytime you are engaging a real estate agent, they should provide you with this document. It's called the Working with Real Estate Agents Disclosure. And there's one that's very similar for South Carolina as well. Basically, it discloses who represents whom in a real estate transaction and how we can represent you and in what capacity. It breaks down the different definitions of the type of agency. And this basically tells you, right? Not to share any. You see right here, this third bullet point on the right. It says, do not share. I'm going to highlight it for you. Do not share any confidential information with the real estate agent, okay? Or assume that they are acting on your behalf until you have entered into an agreement, alrighty? So again, be very careful, especially when you are poking around on the internet. So I'm going to take a pause and I'm going to give you the opportunity to share with me how you are feeling, right? I want to know, as a first-time home buyer or a wannabe aspiring first-time home buyer, or maybe you're a repeat buyer, but you haven't done it in a while. I know there's a lot of things happening, right, in the market and just in general, right, in the world that we live in. Are you overly concerned? Are you nervous? Are you overwhelmed and anxious or intimidated? You're uncertain. And perhaps you may be even excited that you know that this is something that you want to do and you're ready to get started. You have some questions that you need answered and you're not really quite sure where to begin, but there's still a level of excitement. Feel free to share that information with me in the chat and just let me know. You can give me a happy face, a smiley face, you can give me a neutral face, right? Or you can even give me the side eye. Just let me know what you're feeling, okay? Because at the end of this webinar, I want to diffuse a lot of this. I may not be able to erase it all because that's human and it's natural, but I want to be able to tamp it down, right? That at a lower level, right? Because we're always going to have stress about things or a little bit of anxiety, and that can come from excitement too. Alrighty, so we are going to be talking about the home buying process. Someone told me recently that, oh my goodness, you give so much information. They were in the space, so they were in the real estate space. So for other licensed individuals, they may feel like this is a lot of information, but my goal for anyone participating or listening to this webinar online or on YouTube is for you to have all the information that you need to make a decision, even if you're not working with me, right? The objective is for me to give you the knowledge and information that you need to get off to a good start and to have as stressless as a home buying journey and experience as possible. Alrighty. So we're going to talk about a lot of things. I want you to please take notes, and I'm going to break things down to the very minute details, right? Oh, give me 1 second. My little controls are not working. Let me turn this off. Alrighty. Where do you begin in the home buying process? You're here, right, for this class, so I'm assuming that you don't know any of this stuff, right? Unless you tell me in the chat otherwise. The first objective is to establish your baseline, right? So being prepared, making the decision that you want to become a home buyer, right? Coming to a class like this is what I consider establishing a baseline. Identifying where you are right now today so that we can determine the best path moving forward. What makes the most sense for you based upon your unique set of circumstances, right? So determining, is now the right time for you to buy? What is your timeline? Is it 3 months, 6 months, 9 months, 12 months, or beyond? And what is the factoring reason why you are on that timeline? Is it because you're not ready? Is it because you're in a lease? Is it because of you need to save money? What is the underlying reason about that will help determine what the timeline is, right? Then number two, you want to partner with a real estate professional. Okay, that would be me. or whomever is your jam, right? It's very important that when you build your team, that you're building a team of people that you like and trust, right? That you gel with, that you feel comfortable and safe with. That is very important. And maybe you have to interview several agents before you get to that place where you know that this is the person that you want to partner with. Don't feel like you have to be pressured into working with the first person that you talk to, right? Or even me. Feel free to interview agents. Ask the questions that you want to ask. Have an understanding of how they work, right? How is it that they are going to help you? What value do they bring, right, to the table? It's perfectly fine to take your time making that decision. Okay, you don't have to work with just whatever first random agent pops up from, one of the big websites on the internet. Okay, you can take your time and make sure that you're making the right decision, because that way it makes the process a lot less stressful, because you trust what they are telling you and you're not hearing and then going out and still seeking guidance and advice from other people or the internet or whomever, because you know the person that you're working with, right? You can trust what they're saying to you. Then we want to talk about getting pre approved. Pre qualification, pre approval. They mean two different things, right? Pre qualification, excuse me, pre qualification is basically the baseline determining your eligibility, right? And where we are on the spectrum of being ready now or not right now. Okay. And then pre approval is what we want to do when we're actually ready to begin the process to start shopping and buying a home. Okay. You don't have to jump right into getting pre approved. You can start out with being pre qualified. You want to have an assessment, right? And then we're going to determine, okay, are we going to actually begin the home buying process now, or are we waiting? And what additional information do we need to determine the next steps? Okay, and then you're going to get your final pre approval. That's going to be your ticket to go shopping. There's a difference. Okay, and I pre qualify my clients at a base level first before we add the lender to our team. So you're building a team, you're partnering with a real estate agent. That's the first person that the second person. Actually, you're the first person on the team. You are the MVP of the team. You are the boss, you are the coach, you are in charge, right? So when you go into an agreement with a real estate agent, that's exactly what your role is. You are what's called the principal. That means that you run the show. We don't run the show. We don't tell you what to do. We provide you with guidance. We would provide you with our recommendations. We answer questions. We research, right? We give you the facts. We provide data. We do an assessment and an analysis. And then we give you our recommendation and you make the decision, right? And for me personally, as long as you don't ask me to do anything illegal or unethical or immoral, right, I'm going to follow what it is that you are asking me to do, right? Because that's how it's supposed to work. You're supposed to be in the driver's seat, right? And we are there. We are the passenger, and that we are the guide, and we are your advocate, your cheerleader, your champion, your warrior, whatever you want to call it. That's what we are. We are your ride or die, right? To partner with you, because we are truly forming a partnership. Okay. So once we do our initial assessment together and we determine best next steps, then we're going to bring a lender onto your team, right? So you add your agent, that's the first player. Then we're going to add the lender, and then we may need to add a housing counseling agency if you are seeking certain types of down payment assistance. So then we're going to add them to the team. So now we got our team. We got our strong team. We got all our key players. And there may be some other people that we need to add to the team, but the core team are those three or four spots. Okay. You, your agent, your lender, and your housing counseling agency. Okay. And then we map out your unique home buying path. All right. So that is the baseline of what we need to do. You know how I'll give you this analogy. Everybody's probably familiar with going to the mall or an amusement park, a walking trail, hiking trail, what have you. And there's usually a big board, a map, right, that has a pin post like this one that you see on the screen that says, "You are here," right? And there's more than one path to get to the same location, right? But we may all take a different route. Maybe this way is 3 miles. Maybe this is two. Maybe this one is steeper hills. Maybe this way we need to take the elevator. Maybe over here we need to take the stairs, right? Maybe that way is the escalator. But we're all going to the same location, but it depends upon our circumstances and our preferences which path we're going to take. Well, the home buying process is essentially the same thing. There's so many ways to reach that destination, but we have to determine which path makes the most sense for you. And that's a lot of what we're going to be talking about today is once you identify your unique path and we established your baseline, where are you at today, then we can better map out a plan because this process works better when you actually have a plan. So, my process, I start out with initial conversation. We're just talking one on one, right? And so while I'm at it, let me go ahead and share my booking link just in case you want to book a one on one with me. So we start out having a one on one, right? Conversation, no pressure, ask all the questions. We talk about agency. We talk about what it is to partner with me. I find out what your needs and your hopes and dreams are, and we determine if we want to move forward to the next step, right? And then once we decide that, we're going to have a consultation and we're going to talk deeper about agency, about the buyer agency agreement. We're going to talk about compensation and all of those things, right? Um, sorry. I lost my other browser. So let me get that going. I'm going to drop that link in the chat for you. So it is Carolina Homebuyer class.com/book. Everyone. There you go. Alrighty. So if you click that link, it'll take you to my calendar and you can book a one on one with me at any time. Okay. So once we have that initial consultation, we decide, okay, yay, we want to partner together, then we're going to move forward with the agency agreement. Okay. And then we're going to move forward with getting you pre qualified, pre approved, and mapping out your plan. Alrighty. So what does it take? This is the part where you really need to write some stuff down. So before we do that, I'm gonna take a sip of something. You take a sip of something. This is the area where I run into a lot of challenges sometimes, especially with first time home buyers in the workforce housing or affordable housing space, right? Those are usually low to moderate income. If you're familiar with the AMI chart, you may be 80%, 110%, or 120% AMI. Okay. And typically, that buyer may not have a lot of funds towards the purchase. They may need down payment assistance. We may need to stack multiple types of down payment assistance. And so this usually comes as a surprise of all the monies that are required in order to move forward in the home buying process, because sometimes the misconception is that I'm getting down payment assistance, or the builder or seller or whomever is paying all of my closing costs, so I don't need any money. Well, the truth is that you are actually going to need some of your own money. Okay. So, in that money, that upfront money that you need to have is going to cover your initial deposit, your due diligence fee, your earnest money deposit, and or. So it's going to be a deposit, a due diligence fee, earnest money. Some of them are interchangeable depending upon if you're buying new construction or if you're buying a resale property, right? So the builder may have a deposit. And then you're going to have your inspections, re-inspections, appraisal, and survey. Alrighty, so the money that doesn't go away is the initial deposit. No matter how you combine it, what form it is, that is usually never zero. Okay, whether it's a builder or whether it's an individual resale seller that's selling their property, they're going to want some money from you up front to take their house off the market, to give you the opportunity to go over it with a fine tooth comb and investigate the home and do your inspections, right? So you want me to take my house off the market for 30, 45, 60 days? I'm going to need some skin in the game from you. Sometimes that money is potentially refundable and sometimes it is not. Due diligence money is a fee that once it leaves your hands, you will not get it back. So we have to be careful and strategic about how we utilize due diligence money if we're offering due diligence money. Okay. And in our area, in our market, in the Charlotte metro area, typically sellers want both. They want due diligence and they want earnest money. But we talk about that because it can change from property to property. We look at things like, how long has this house been on the market? Are there multiple offers? And if not, we may have wiggle room with what type of money we offer and how much we offer. But you're going to have something. A good number, if you want to pin me down and get a number from me, just use 1% as the number. So if it's a $300,000 house, you need $3,000 deposit. Okay. Sometimes builders have different level of deposits. There are some phenomenal new construction opportunities, and there's even one where the deposit is 1,500, right? And the builder's paying all of your closing costs, but you still are going to need at least about $3,000 because you still have the other items that are on this list. Okay. We don't advise that you skip your home inspections, right? Those are optional. The inspection, if you're not getting down payment assistance, some down payment assistance programs require inspections and they have to pass. Okay, so there are some instances where it is optional that you get an inspection and some where it is not optional. So you have your inspections and then potentially re-inspections. If we negotiate repairs and then something needs to be re-inspected to determine that it was actually repaired and it was repaired properly, there may be a fee for that. Then you have your appraisal, which generally, when you're borrowing money, you're getting a loan, is required, right? So you have your appraisal fee, and then if you're getting a survey, the survey is one that if we had to not if you had to skip any of these right away, or in the beginning, I recommend that people get surveys, but they can be expensive and it also can take time because surveys usually need about 3 to 6 weeks schedule time. And sometimes our due diligence period isn't 3 to 6 weeks. So we try to get as much information as we possibly can about the property. But if it's critically important to know where the boundaries, where the property lines are before you close on that property, that's something that we have to determine and build in to the process to make sure that we're going to have enough time to get it ordered, get the survey done, and the report back within our due diligence period if it's a deal breaker. So that's something that we really strategize and talk about. So between your initial deposit, your inspection, your appraisal, and your survey, that can be anywhere from about 15, I'm gonna say 2,500, because this $1,500 deposit for this one builder is on the low side and it's not really common. 2,500 and up. So I would say the minimum amount of money that you should probably plan to have if you're buying a home under $400,000 is $2,500. I can work some magic, but it just makes it a lot harder. So the more money you have, the better. And then we don't have to be so tight and constrained. And we may have more chance of getting your offer accepted on the house that you want if you actually have more money, skin in the game, as some of us like to call it. Okay, so just keep that in mind. You need to have some money to begin this process no matter what, no matter if you're getting down payment assistance or not, or 100% financing. And I'll give you an example. I had a client who bought a brand new house. She was in the 80% AMI. So she received down three down payment assistance, um, $65,000 in down payment assistance because we stacked three programs. Okay. So her deposit, the minimum amount of money that she had to pay out of pocket for her deposit for this particular program was $1,000. Okay. Her inspections and her appraisal and all of that was about another $1,000. So that's $2,000. And then she had some reinspection. So let's just say she spent $2,500. That was all she had in the game. And she got $65,000 in down payment assistance. So the amount that she borrowed was more than 20%. So she had no mortgage insurance. So the total out of pocket in that scenario for 80% AMI buyer was $2,500. I've had another where it was $5,000. So that number can vary based upon the property, the programs, and that particular seller. Okay. The total cost associated, right? If you're not getting any money from anybody else, no down payment assistance, no builder paid anything, you need the upfront costs, you need your down payment, you need your closing costs, and you might also need your buyer agent compensation. So we're going to try to eliminate as many of these as we can, as we reasonably can. But at the end of the day, there's one bucket that we cannot take away, and it is the upfront cost bucket that covers your deposits and your earnest money or due diligence. We can't make that one go away. This one we might could get rid of if we're getting 100% finance or down payment assistance. This one, the down payment assistance money is for all costs associated, the down payment and the closing costs. So we may be able to address that whether it's the builder or whether it's through a program. And then If we're buying a property where the seller is paying the buyer agent compensation or the builder is paying the buyer agent compensation, we may be able to get rid of that one. So as you can see, we have a lot of room to get rid of some things, right? But this one's not going anywhere, okay? This one, nope, we can't get rid of it. Alrighty. So if that, I hope that's clear. Alrighty. So what are some things that you could be doing right now? And sometimes people look at this list and they laugh, right? Okay, because of number 4 especially. But in all seriousness, if you've already decided that purchasing a home is something that you want to do, understanding your credit is the most important thing to do right now today. Okay? So I'm going to take a sip of something. I'm going to put into the chat my rewards program, okay? Incredible dash, don't leave out the dash, rewards.com. If you go to this website, let me just make sure it works. Okay, yep. I don't know if my screen share switched or not, but let me get my presentation back up. If you go to that website, it will take you to my rewards program. Sign up for it. Okay, whether you're going to work with me or not, just sign up. It will give you a free FICO 4 credit report. This report is the closest score that is up to a mortgage credit score as you can get. The mortgage companies typically use FICO 245, right? Most of the other consumer facing websites are going to provide a FICO 8 or Vantage score, right? Because they use different scoring models, and those scores are not the same scores that lenders typically see. So if you go to my website, there's a lot of features and bonuses on there for my clients. If you don't become a client, the only thing that you can get from the site is the free credit report. But if you become a client, you actually can get points, right? Where you can redeem to get money towards your closing costs at the end of your transaction from me. Okay, so that's just extra money thrown on top. Alrighty, but the most important thing to know right now is that you can go to that website and get a free FICO 4 credit report. We're not really going to the site to get the credit report specifically for the score because it's more important for you to understand the contents of your credit report right now, right? Because typically the score aligns with what's on it, right? If you got good stuff on it, you typically gonna have a good score. If you got good stuff and a little bit of bad stuff, your score might be alright. If you got a lot of bad stuff, then your score might be a little bit on the sad side. But that's okay. Life is lifing, right? As long as we have breath in our bodies, life is gonna happen. Things are gonna happen. That's why we at the beginning establish our baseline to determine where you are today and what is your path based upon your unique set of circumstances. And you're going to hear me say some things repetitively because I want you to remember. Okay. So that's one of the reasons why we established the baseline, because we're determining, are you ready right now? Or do we have work to do? And how long is the work going to take? Right. And if we are both on board to doing the work to get us to where we need to be. So that knowing what's on your credit report, knowing if there are any inaccuracies on your credit report is critical. If your score is not where it needs to be, why? Is it because of high utilization? Is it because of derogatory credit? Is it because of not enough credit or not a diverse credit? Maybe you're not using the credit that you do have. So we need to figure out what the situation is with your credit and understand it more so than we even need to know what the score is, right? And then we need to know what the score is to determine what you may be eligible for based on your score, if that makes sense. So many of the down payment assistance programs require a 640 or higher to be eligible. There's one finance program right now that's 100% financing, no mortgage insurance, and $20,000 in assistance that requires a 620. So we need to determine where you fall, okay, to determine what you're eligible for, right? So that's the first thing. The second thing is save. Even if you already have money, you just keep saving because you can't ever have too much. And you always need rainy day money, right? So I think, a lot of people that I talk to are not necessarily great savers. And then we don't want to deplete everything just getting into the house, and now you have no money left because you had to spend it all on all of those other upfront costs and costs associated with buying a home. So we want you to have some money for other stuff that comes up in life, the fun stuff, the unfortunate emergency stuff. We want you to be prepared for that. Number three, start exploring areas where you think you could live, right? Where you want to live. Because if you're in the greater Charlotte metro area, right, the cost of housing has increased so much. I actually have my little chart over here because I was doing some research earlier today. And because we now have data from March, because we don't get it until about the first week of the next month for the previous month. And I just want to tell you for March, the average sales price in the Charlotte metro area. So this includes Cabarrus County, Gaston County, Iredell, Lincoln, Mecklenburg, Rowan, Union, in North Carolina, and then we have Lancaster, Chester, and York counties in South Carolina. That's the MSA. So that's the metropolitan area, right? So Charlotte, and then the surrounding areas that are a part of the Charlotte MSA. All right. And so the average price point is sales price $535,000. Okay. So Charlotte is over $600,000 when you extract out all of the other areas in the MSA. Okay. So for some of us, we actually need to go out to the surrounding areas to be able to get more bang for our buck. Right. In a lot of instances, buying in Charlotte is just not feasible for a lot of first time home buyers because the homes have gotten unaffordable, especially with today's rates, as well as the price of homes. Then that may not be an option. So sometimes when I say, hey, we might need to think about this area, the first thing is, oh, that's far, or oh, I don't know, I don't want to live there. But if you start exploring now, you may fall in love with some areas. You may realize that maybe the commute is not that bad if you have a commute. Or if you're lucky enough to maybe not have a commute, then maybe you can see that, oh, I actually like some of these other outlying areas. Go spend a Saturday or a Sunday in some of these areas surrounding Charlotte, right? So Charlotte is in Mecklenburg County, and all the counties that touch Mecklenburg County, Cabarrus, Gaston, Rowan. Even though Stanley doesn't touch Mecklenburg, Stanley is still one of my favorite counties, right? And then of course the South Carolina counties. Go spend some time there. Go do something fun. Go check out a local, maybe mom and pop, or go to a restaurant that you heard of is really amazing and just explore. Look at some of the houses, look at the neighborhoods. Just don't go to new construction. Okay, we're gonna talk about that later. And just see, can I see myself living in this neighborhood or in this general area so that when it comes time to start mapping out where we're gonna um make our strategic search, we know exactly what we're looking for, right? And where we're looking for it. Maybe we've already determined that based on what you want, that Charlotte, you can't get it because you're not going to get it at the price that you're qualified for. So now we already know, okay, here are some other areas that I really like that I think I could live, and we might need to take a look at those. But we don't need to be trying to figure this out while we're searching for a home. You can start doing this stuff now, okay? And this is the one that people get a kick out of: purging and decluttering. Why am I even talking about this? It's because I know you. It's because I've done this enough times to know that people procrastinate. They wait to the last minute. They think this process is going to take forever and it goes by real fast. And then it's time to move. And guess who's not ready? Guess who has not scheduled a mover? Guess whose stuff is everywhere? You haven't packed not one box. You got a whole bunch of stuff that now you're like, ooh, do I want to take this to my new house? But now you don't have time to sort through it all because you didn't do it ahead of time. And now you're like, ooh, I'm just going to be a whole new me. My house is going to be all super, organized and all of this. And now you can't because you got to bring all your stuff because you waited to the last minute. Start doing it now. It's spring anyway, right? We're spring cleaning anyway. So spring clean. Get rid of stuff, sell it, throw it away, donate it, whatever you need to do. And then when you get closer, when you get pre-approved, I tell people to start actually packing and keep out your essentials because it's going to go by fast. Just pack up all the stuff you don't really need on a daily basis. Keep it neat and organized and ready to go. And then when it's time to close and move, it's easy breezy. I'm trying to eliminate added stressors from your life throughout this process because it can be a journey. It could be a lot of work, especially if you're getting down payment assistance monies. There's a lot of paperwork. It's very paper. intensive, right? A lot of documents or document intense. And so there are some things that we could take off our plate that we don't have to worry about. And this is one of them that causes a lot of stress. So get rid of the extra unnecessary stress. So that's my preaching on that. Okay. All righty. So any questions? Anybody want to say anything? And I'm sorry if you are tuning in from YouTube. I am not able to see my YouTube chat because if I click over there, it's going to take away my screen share. But I'm going to see if I can reconfigure that. Okay. So before we start talking about the most common mistakes, I want you to tell me in the chat how you're feeling now, right? Or if you have a specific question. I'm going to stop sharing for a moment. All right. So you should be able to see me at this point and just me, hopefully. Let me know in the chat if that's all you see right now. Okay, perfect. Thank you for that. And let's see. I want to move my screen so that I can have a better view of the chat. So you take a sip of something while I do this, or get your question ready. If you want to ask me a question, go ahead and have your question ready. And then we're going to talk about the most common mistakes that first time homebuyers tend to make, okay? And that I want to help you avoid. And these are critical parts of the process. And again, to make this as stressless as possible so that you can move with confidence during this process. That is my objective, is for you to be confident in the process. All right, so mistake number one, let's talk about comparing ourselves to other people, right? So, you didn't know we were going to get lessons on other practical things that you probably help you in other areas of your life, in addition to the home buying process. One of the biggest mistakes that first time home buyers tend to make when they're going through this process is always second guessing everything, right? And comparing themselves to the internet, social media, friends, family, Googling things. And it just causes a lot of unnecessary, undue pressure and undue stress. So going into this process, just take a full ownership that this is your process and nobody else's, right? And what is for you is for you, and what is for them is for them. Okay. And that's why it's super important to be very careful about who you add to your team, because then we can push out all of the noise that's coming from the background noise, right, of the friends and the family members and all the things in the internet. And oh, you should do this and you should do it this way. Well, don't forget about this, because if you're working with that person that you trust, right, you know that they're giving you the information, guidance that you need. And each homebuyer experience is unique. You see this little thumbprint on the screen, right? Everybody's experience is unique to them. So your income, your assets, your debt, your credit, right, are unique to you. Your history and life experiences are unique to you, right? A program and strategy that may work for someone else, whether it's your coworker, friend, family member, whomever, may not work for you. Okay, even if you feel like, oh, but we just alike, me and my friend are just alike, and they got this, so I should get it too. That is not necessarily true, because I promise you, there's something about that person that you do not know. Okay, you think you know everything about people, but you don't know. Even your best friend, you don't know. Alrighty. So as your team, it's our job to help you identify, right, the best options for you based upon your what? Unique set of circumstances. So again, I'm saying the same thing over and over because that helps with retention and remembering, not because I'm just redundant and repetitive. Okay. Yes. I know. It is very unfortunate. It makes me sad that Charlotte is so expensive. One of the things I'll kind of pause here and talk about for a moment is that new construction sometimes can be a way to counteract that, because builders typically are paying down or buying down the interest rates. And so that gives you more buying power, and they're paying all of your closing costs and your agent. So that's going to save you a ton of money. So you may be able to have more buying power because the interest rate is a lot lower than what the market rate may be when you're buying from a builder because they bought it down so low. I've seen builders with rates starting at 3.99, 4.99, right? So that's one way. And also some down payment assistance programs, especially in Charlotte. All right, so I don't want to go off on a tangent on this just yet, but actually, I think I will take a quick segue. If you are considering down payment assistance and you are in the greater Charlotte metro area and you want to live in Charlotte, you do not have time to play games and procrastinate on certain things because there is so much money available in North Carolina and even more within the city of Charlotte. And the program guidelines are changing for the House Charlotte program. And it's going to take a lot of diligence, right, in order to navigate that process so that you can benefit from all of the pools of money that are available. Because if you're slow, if you're not getting the documents in, if you're not doing all the things, you will miss out. And we don't know how long this money is going to last, okay, because of other things that are happening in our economy and things like that that are impacting some of these pools of money. So, between now and summer is a really good time if you're ready. If you're not ready and we need to get you ready, we need to start working on that right now because there is a lot of money that could be potentially left on the table or that you might just miss out completely if you drag your feet on certain things. So, and I say that because Charlotte is expensive, but there are ways that we can kind of reduce that cost and get people into homes through stacking down payment assistance up to $145,000 and in some instances maybe 160, 165, depending upon if the lender also has money. And this is stacking 2, 3, 4 programs like the buyer that I was talking about earlier who bought a brand new home in Concord. It was owned by the city of Concord and it was an off-market home, right? That I know because of the people and organizations that I'm connected with, right? She got that $65,000 by stacking 3 programs. She got down payment assistance through North Carolina Housing Finance, through CPLP, which is running low, right? And the city of Concord also gave her down payment assistance. And then she got a $1,000 grant from the Realtor Housing Foundation because I am a workforce housing real estate agent. And I just submit a document for my clients and they get an extra $3,000. Okay. So that was $66,000 that this buyer received, right? But she had to do a lot of work on her side. And some of it was repetitive because they all want something, they want most of the same stuff, but then there's some one off things that one needs that the other one didn't. Okay. So it's a lot of documents and paperwork. And we're going to talk about that as well a little bit later. So, again, if you don't have your pen and paper, that will be a section that you really want to take some notes. Alrighty. So, don't worry, once we kind of have our consultation, we'll talk about all the things and try to figure out how to get you what you want and where you want to be based upon what you're eligible for as affordably as we can. Okay. Number 2. Alrighty. So this is another one of those things where it's like, what are you talking about? Focusing on first time homebuyer incentives. Isn't that the purpose of this webinar? You're talking about first time homebuyer programs. Some people get hyper fixated on things having a name. Some programs are not exclusive to first time homebuyers. Okay, so just because it may not have a name of being a first time homebuyer program does not mean that it's not a great program and you're not getting the best program that you are eligible for. Sometimes when first time homebuyers are not getting something that's they think is has a title that has something to do with being a first time homebuyer, that they're missing out on something. Just know that if you are working with me, we are looking under all the rocks, right? And we are going to determine every program that you are eligible before so that you can make the informed decision about which one you want to pursue. All right. And it may or may not have anything to do with being a quote unquote first time home buyer. Okay. All right, because there's so many types of mortgages and programs. So we have conventional loans, we have FHA loans, USDA loans, we have guaranteed and direct. I am also a USDA direct loan packager. It's a very different product than guaranteed, which is done by a typical loan officer through a bank, or through a mortgage company, whereas this program is directly through the government, and you have someone like me that helps you navigate the application process. Amazing program, but that's not the topic of this webinar. But I will be doing a webinar specifically about USDA Direct. Just know it's a government program and it can take a really long time, but it's amazing. Okay. All right, so we're not really going to get into like loans, but just to give you an example, FHA loans typically, the advantage is you can have lower credit scores, and the down payment requirement is 3.5%, right? Um, and they also may allow higher debt to income ratios. So there's different types, and sellers can contribute up to 6% towards your closing costs with the FHA loan. So remember, if you have a score below 640, or 620, there are some programs that you may not be eligible for, and a loan like this may be your best option because of the requirements, such as you can have a credit score in the fives, and then your down payment isn't as high as with some conventional products, and then they may allow higher DTI, and then the seller can contribute up to 6% towards your closing costs. So that's something that we could look at if for some reason we don't want down payment assistance or you're not eligible for it. Okay. Conventional loans, they're not secured by a government entity, and typically the down payment is about 5%. You may, and you can eliminate mortgage insurance if you have 20% or more. But typically for my clients who are getting down payment assistance, especially the higher amounts, because there are down payment assistance programs as low as 15, you can stack it with 30, you can stack it with 50, you can stack it with 80, and so on, is that usually you receive so much money that it automatically is going to eliminate mortgage insurance because your down payment is going to be more than 20%. So even though you may not necessarily be in a conventional loan like this loan, but because you have so much money towards your down payment that you don't have mortgage insurance, okay? So let's take a sip of something first, okay? I'm gonna pause real quick. Alrighty. So we talked a lot about money and about what the money is for. Well, where do you get it from? What money can you use when you're buying a home? I'm not usually a big fan of taking money out of your 401k, right? That's money that you've set aside or you've been building up for retirement, okay? But you can if you need to. So, one thing that I would say that you can, with the other four things that you can start doing right now, add this to your homework. If taking money out of your 401k is something that you're thinking about doing or you've considered doing and you don't already have this information, contact your administrator, whether it's through your employer or through a third party entity, whomever it is that you need to reach out to, and ask what the process is. I am interested in purchasing my first home or a home, and I need to withdraw money from my 401k. What does that look like for me? What are the pros and cons, and are there any penalties, and do I have to pay this money back? And also, what is the timeline, and what would you need from me in order for me to start that process? Some 401ks require that you are already under contract. So if yours happen to have that requirement, you cannot use this money for the upfront cost. And some people, that's what they need the money for because they don't have it. So this is information that you need to get now so that we know when we're mapping out our strategy and we're talking about the money part, where all the money is coming from. Do you already have the money? Are you trying to get it from your 401k? Right? Are you getting a gift? And so those are things that we need to address. But this is an easy one that you can work on now, even if you're not buying today, right? Just find out what are the requirements and how long does it take, and do I already have to be under contract or not in order to withdraw the money. So 401k retirement, kind of one and the same thing. That's money that you can use. That's something that you can explore as well. Let's talk about gift funds, because you can use gift funds, but this needs to be done in a very strategic way. So don't go get gift money from anybody, right now. And this is a good place for me to give my little spiel about taking a selfie of your financial picture, right? I like to use corny, funny, whatever analogies because they make us remember. You are going to remember this, okay? And if you were around when we were doing the mannequin challenge, you'll remember. Okay, so either we're doing the mannequin challenge, so we frozen, right? We just still. We're not changing anything about our financial picture. We're taking a selfie of our financial makeup. We're not changing anything from this point forward if buying a house is something that you aspire to do. No matter what when your timeline is, okay? We're freezing everything in time because the people that you put on your team are the people that are going to help you determine what you need to do from your starting point forward. And there are things that you can do that will impede your own progress or cause problems or delays. So let's just not do anything. Let's not get any lump sums of money from people. Oh, Uncle so and so said they're going to give me $10,000 when I buy my first house. So I'm just going to go get the money from them and put it in my bank account. We're not going to do any of that. Okay. You can use gift money, but it needs to be done in a strategic way. And the best way is for it not to go through your hands, right? So for it to go from them to the closing attorney when you close on your house and they'll bypass you, you don't have to go in your account and all of that. It just makes the process easier. Let your loan officer tell you how to obtain the gift funds. So we're not going to do that right now, but it's money you can use. Okay, so you can use stocks, bonds. If you have something you can cash in, you got a car, maybe you have multiple cars, one you don't need that you own free and clear, you could sell it. Just keep the bill of sale so we can substantiate, right, where it came from. And how you got that money, just in case the underwriter wants to know. Okay, they put $8,000 in the bank on this day. Where did it come from? Okay, or cash. What does cash mean? Cash is not literally like a bag of cash. It is liquid money that you have in your check-ins or savings account, or maybe even a money market. Money that you can put your hands on really quickly, like today, tomorrow. Money you can go get, right? Unlike 401k money, that's a process. It may belong to you, but you got to go through some stuff and it may take a minute for you to get it. This is money that is you already have on hand and is seasoned in your account. It's been in there for a while. Okay. So that's the cash that you can use. Alrighty. So let's talk about what you cannot use. We cannot use credit cards and we cannot use a loan to get a loan. So no credit cards, no loan to get a loan. There are some circumstances where this is feasible, but not for most of us. Okay. So we just gonna go ahead and say no. And then this one, we just gonna scribble this one all up because we are not using undocumented cash that fell out the sky, okay, and putting it in the bank thinking we're gonna use it to buy a house. All right, we're not doing that, okay? No. So when we were talking earlier about let me erase that. We were talking earlier about the cash that you can use that's seasoned, that's already been in your account. That's the money that we're talking about. We're not talking about unseasoned money, mystery money that you said, oh, I had it in a shoebox. We're not using that type of money. But guess who we're going to talk to about all this stuff? Our team. We're going to talk to our agent, we're going to talk to our lender, and we may need to talk to our housing counseling agent, our counselor about the money part. And there is a such thing as having too much money, right? You will be ineligible for certain programs if you have too much money. That's a thing as well. So we need to, that's why it's really important once you build your team of people that you trust, right? And that you like, is that you're being honest and open and transparent with them because you want to tell them all the things, right? Because we don't want any hiccups, any roadblocks, any challenges for stuff that we forgot to mention, right? Because we can give you guidance on the best way to handle that situation so that it doesn't interfere with the process. Alrighty. So inhale, exhale. Take a sip of something. When you talk a lot, you get thirsty. All right. Number three, y'all. This one right here. For some reason, people love to say, I want to buy a house, but don't pull my credit. And I don't want to get pre approved, but show me some houses. Okay. We real estate agents are not showing you houses without a pre-approval and without knowing that you actually have the money for all the things, right? That would be doing you a huge disservice. All right, that's not the way that this process is supposed to work. We do not put the cart before the horse, right? When it comes to shopping for homes, visiting homes, buying homes, one, you're going to get your heart broken because you're going to fall in love with something that you can't buy. And two, you wouldn't be able to move forward anyway because you don't have all the things in order. And this happens a lot too, especially people who are needing down payment assistance and they haven't done all the things that they need to do to be eligible. And then they go find a house, they fall in love, and then they miss that opportunity because they didn't do the pre work. And I'll give you just a quick example and a story of something that happened very recently with a client who, again, it was an off market opportunity of a brand new house that was built by the city. I'm not going to say which city, but by a city in the general area. And they had one, discounted the price because they wanted to get it off their books. And two, it was eligible for an extra $25,000 that was earmarked specifically for this house. And there was also another $50,000, I think, in down payment assistance. I believe it was a total of 85,000. No, it was 90,000 that they were eligible for. 90,000. And they missed out on this home because of one piece of paper. And I would hate for that to happen to someone else. And it wasn't the pre approval or not getting pre qualified, but it was an important document relating to their tax returns, a W 2 that they did not have, and felt like, oh, well, they don't really need it. I can't find it. So you missed out on this amazing brand new house. You're this almost $100,000 in down payment assistance because of one piece of paper. So that's why I say a lot of these things may seem like they're frivolous, but they're very, very important. Okay. And there's nothing that I've said that's not critical and important to the process during this webinar so far, even the small things that might seem a little bit silly. But we have to get pre approved, right? To start this process. Because one, no seller is going to accept your offer, right? A builder is not going to put you under contract on one of their homes without a pre-approval letter. This is a step we cannot skip. But people ask all the time, can we go see houses? And they haven't done this step. Or you send them to the lender and then the lender calls you and says, oh, well, they didn't want me to pull their credit, so I really can't give them a pre-approval. That's not how the process works. Okay. We have to do these things or we're just pretending like we want to buy a house, right? All right. What are the pillars to qualifying for a mortgage, right? You got to join the CIA, okay? And then the D is for a little razzle dazzle: income, assets, credit, the debt that you carry. That is what you need to begin this process. This is what the lender is going to want to know in the beginning. Do you have a job? How long have you been working there? And how much money, sorry for the balloons, and how much money do you make? They're going to want to know that. And has it been 2 or more years or less than 2 years? Because that's going to make the process different. Have you had any gaps in your employment? Okay. So that's the employment bucket. The asset bucket is, remember the bucket we were talking about, the undocumented cash and things like that. Do you have money in the bank? How much money do you have in the bank? And don't try to hide money either. Okay. Because that's, it's gonna come, all the secrets come out. Okay, they have ways. Do you have any money and how much do you have? Me as a realtor, I need to know, do you have any money and how much do you have? Okay, because I cannot strategize for you without this information. Don't keep secrets from your team. Alrighty. And if you feel like you're with the wrong team, just get off that team and go pick another one. Because you need to feel comfortable enough to tell them all the things. All right. Credit. Remember, way back at the very beginning, we talked about what you can be doing right now. What is on your credit report? Is it high, low? Is it in the middle? Right? Do you already know that we got some work to do? Let's talk about it. Let's figure this piece out. Right? And then how much debt do you have? And once again, unless you already did it, remember, we're frozen in time. We took our financial selfie. We're not co signing. We're not doing, and I'm going to talk about this later too, because y'all need to remember this. Um, a lot of people that I've encountered that I was not able to help was because they co-signed for vehicles for other people and they also have their own vehicle. And it just obliterated their debt to income ratio to where they only qualify for $50,000. And we know there's no houses for $50,000. So how much debt do you have and what kind of debt is it? And do we need to pay any of it off? Okay. But the four pillars that you need to remember is the CIA plus the razzle dazzle, the D, the debt. Okay. income, assets, credit, and the debt that you carry. All right. And we already talked about this. Where does the money go, right? That you need for this process. It goes towards the down payment, closing costs, upfront costs. And which ones can we eliminate? Who can tell me which one of these can we eliminate? Potentially. Somebody tell me in the chat. Because there's one of them that we cannot, okay? All right, so we talked about this, but we're going to go a little bit deeper into the pre-approval process and getting pre-qualified, right? When you and I meet, if we decide that we want to be booed up and we want to partner together, right? I gave you the piece of paper. Do you want to partner with me? Check yes or check no, and you check yes, and we're like all in love, right? We are going to solidify that by going into a buyer agency agreement. So now we're under a contract, and we have formed a partnership. We are now officially partners. We're a team working towards this goal. And we're going to talk about these things because this helps me determine what lenders I might recommend that you reach out to you to. Even if you come to me with a pre-approval already, I'm probably going to tell you we need to put that to the side, right? Because I'm not trusting of pre-approvals from people I don't know, right? Not to say you cannot remember who's the boss. You are the boss and you get to make the decisions, but there are some things that I'm going to strongly recommend, and there are some things that I might say, you know what, I'm not the best agent for you, right? Because we need to make sure that we're partnered with the right lender based upon what? Your unique set of circumstances, okay? So getting pre-approved helps us determine how much do you qualify for, how to properly establish your budget of, because just because you qualify for five doesn't mean you want to buy a $500,000 house, because maybe you don't want the payment that comes with a $500,000 house. Maybe you want the payment that comes with a $300,000 house, right? So we need to figure all of these things out because it's a part of our strategy. It's a part of our game plan, right? Getting pre-approved also helps you increase your bargaining power with the seller, with negotiating. They're not really going to want to talk to you without it, right? We really need to have a good idea of what your monthly payment is and what your tolerance is for the payment. Sometimes people do this later. They fall in love with the house and then they get shocked when they find out what the monthly payment is. And now, oh no, I can't do this, right? We need to do this up front so we already know what the plan is, right? And most importantly, it helps us identify what loan product you are eligible for that will fulfill your needs. What programs, what down payment assistance, what loans, right? So it's very critical to get this step done as early as possible. Okay. Tips for a simple loan approval, things to do and not to do. Take a sip of something. Alrighty, if I'm talking too fast, let me know. Slow down. I'll slow down. Lots of information though. All right, so do call if you have questions. There's something that you're not sure about. I arm my clients with a cheat sheet. I send it to you as a PNG file. So you can save it as a photo on your phone. You can save it as your screensaver if you want to, because there are things that I need you to remember throughout the entire process, right? So I'm not going to give you a piece of paper that you're going to have in the back of your car all trampled over. I'm going to give you something because I know you're going to keep your phone. I know you're not going to lose it. And if you do, you're going to go get another one that you can reference throughout the process. And I will remind you, hey, remember the cheat sheet that I sent you? I need you to reference it. Do call. Questions about anything and everything. Stay where you're living, right? Don't change. And these are things that are not necessarily hard and fast rules that you absolutely cannot deviate from, but they are the things that you need to be very mindful and careful of and ask before you do it. Okay? Because there are things that people can do that will derail everything. For example, I had a client who quit his job right about a week or two before closing. And he went and got a job with a temp agency. So he thought because he still had a job, it wasn't going to impact anything. Well, that did not work, right? What type of employment you already have when you got pre-approved is typically what you need to have throughout the whole process. So don't change anything. Don't make any rash decisions. If somebody make you mad, just grin and bear it until you get through this process. Okay. And so he was able to move forward with buying the home, but he had to actually have a family member step in. And everybody doesn't have a family member that's going to be able to step in for us like that, right? For some people, that will derail the whole process and you will no longer be able to get this house. Unless, and then too, sometimes what can happen is you don't say anything early enough to prevent the deal from falling through. If we know ahead of time that something has happened or something is coming up, we can plan for it. That's why that transparency is important as well. Hey, this is happening. I've got a sense about this with my job. Something might be changing. The lender can say, hey, this is what you need to do and this is how you need to do it. Okay. um, don't move, because sometimes moving causes credit inquiries or expending excess money for no, for whatever, unless you in a emergency situation. Pay your rent and bills and all of that on time, right? Do that. Do, and I say this with caution, do use your credit as normal. However, if your utilization is extremely high, we are not doing that. If you are, I use it and I pay it, I use it and I pay it, you're fine to keep doing that, right? But if you have high utilization that has your score in a fragile state, or your debt to income is very sensitive, you want to be careful with this one. But we're not saying no longer live your life. Okay. We're not saying that. But there are some things that you may have to minimize or stop doing altogether. Okay. Stay where you work. Okay. Don't quit your job. And don't go from W 2 to 1099. Okay. Or self employed. Because no, we're not doing that. Keep your same insurance, right? Stay current on all of your accounts. Don't pay anything late. Okay, please don't do that. And then this is a biggie. I think I say that about everything because everything is so important. Everything is important. But this one right here, I think I need a red. Do I have a red marker for this one? Uh-oh. Let me see if I have a red marker. This one? Oh, I'm literally marking it off. That's not what I want to do. Um, Let me just use my blue. This one is a big one, okay? Expect requests for additional documentation throughout the process. Please expect this, especially if you're getting down payment assistance. Someone's going to ask you for something that they already asked you for or that you already provided, right? And you're gonna call me. You're gonna scream and yell and cry and all the things, right? You're gonna be mad and all that. Meanwhile, you could have just done it and sent them the document and been on about your business. It's gonna happen. I promise you it's going to happen, especially if you're getting down payment assistance. Expect, if this doesn't happen, I will be shocked. Expect it. No matter who you're working with, whether it's me, Charlie Brown, whoever, expect this to happen, right? But just do the thing. Like the don't be my client that missed out on her $90,000 in her brand new house over one piece of paper. Okay? It's important. Don't complain. Don't even really complain. But if you gotta complain, I might listen. But if you do it all the time, I'm gonna be like, listen, where are we trying to go? Because that's not getting us there. Alrighty. Don't make any large purchases. Don't change bank accounts. Keep the accounts you already have. But if you're one of those person that has 50 11 accounts because you got $5 in this credit union, $3 in this credit union because you just joined all the credit unions, plus you got a bank account with one of the big banks, and why are you doing that and making your life complicated? Because guess what? They're gonna need all of those statements. And if you got three, four, five of these and it's not necessary, I would say get rid of them, and just have one. Because why? That's what was the reason. I don't understand why people do this. That shouldn't be, because it's not necessary and it's just making your life messy. Or you're trying to remember, okay, do I need to move money over here? I see people that their checking account is like this, crisscross, transfer, 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 because they got all of these unnecessary accounts. Because when you're getting down payment assistance or even the loan, the lender is going to want your last two pay stubs. And depending upon how long you're in the process, you might need to provide more pay stubs and updated pay stubs and so on. If you're working with different down payment assistance agencies, they're also going to want your bank statements and all that. So now you've got six accounts and you got to get all these statements to all these different people, and you might be in this process for 6 months. Who wants to keep doing all of that unnecessary work? I mean, if that's what you want to do, you can do it. But I'm just telling you, if it's not necessary, don't do it. So that's something you can also start working on too. What can you eliminate from your life? What stressors or things that you did that you thought was a good idea because you heard about it on TikTok that maybe you should stop doing? Transfer balances, like all over the place. Your friend, your relatives, whomever, between your own accounts and your bank account is just chaotic. Let's try to bring that down, okay? Don't make it so complicated. Like, we make our lives complicated sometimes for no reason. Even if you never buy a house, some of this stuff is good stuff, okay? Don't close any of your accounts. Don't try to go refinance anything to save $20. It's going to impact your credit score, or the age of your credit, or all the things, right? Remember, we took the selfie. The picture needs to stay the same until your lender or the housing counseling agency says do something different. Don't do it. Okay. Don't close any accounts. Don't consolidate any debt or anything. Don't join any credit repair or whatever. Just none of that. Okay. And don't apply for new credit or take out a new loan. And please do not co sign for anything. There's a misconception that co signing means that you are like this invisible entity that helped the person get the thing, but you're not financially responsible and you're only in the background. You are, if it's on your credit report and you co-sign for it, it's 100% yours and it's going to count against you. Okay. And it can destroy your debt to income ratio as well. So we are not doing this. We're not co-signing. Even if you don't think you're going to buy a house for 5 years, don't co-sign. All right. Sorry. But that person, they got to go get their own car. Don't do it. And don't max out or overcharge on your credit cards. Your utilization really should be 10% or below, believe it or not 30. We kind of hear 30 out here, but for optimal score, if you don't need your score to be optimal because it's already solid, that's fine. But if you need to optimize your score, you need to get that utilization way down, right? Definitely under 30, but ideally around 10 or below. So this is an example of where you might have a credit card. Let's just say you have a credit card and you have $1,000 limit and your cell phone bill is 125. So you're going to pay your cell phone bill every month, auto pay on this credit card, and then you're going to pay the bill. You're going to pay it on auto pay, you're going to pay the bill. And you're not really using it for anything else. That's a good analogy, okay? And that's going to keep your utilization at around 10%. All right. So what's next? Mistake number 4. I know I talked about this a lot and I can get really excited if you can't tell, but that's because I really, 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 really love you. And I want my heart to stay full. I don't want it to end up broken because you did something that you should not have done. All righty. Be flexible and willing to compromise. Sometimes this takes a lot of self regulation, right? Because we want what we want, and sometimes we don't want to look outside of that. But in this process, sometimes it's required in order for you to get to the ultimate goal. So keep your eye on the prize, on what your ultimate goal is. Just know your first house does not have to be your forever house. Your second house doesn't even have to be your forever house, okay? And if this is something that you truly want to do, don't let the small things impact your process, whether it's adding unnecessary stress to the process or causing you not to be able to move forward, right? Sometimes, especially again, with down payment assistance programs, there are going to be things that you're going to need to do, like the request for multiple documents that maybe they already asked for, a redundancy, or a lot of work on your end to obtain all of the documents and get them in a timely manner. And then you're not flexible. Someone asks you for something, like it's like, oh well, I don't have that. That's why is that even important? A lot of times people actually tell me this. Well, I didn't think it was important. Well, why did you come up with that idea that it wasn't important? If they asked you for it, then apparently they needed it. Well, it's not up to you to decide what's important to the person that's giving you 100, 2, 3, 4, 5, 6, $7,000 or more, for you to buy a house. They're going to want to be in all of your business. All right. So that's something that you can, accept and put it on like your mirror or something. They're going to be in my business and that's okay because I want what I want. Right. So just know that this right here can make things really challenging and difficult when we are not flexible or we get worked up, we get upset, and it's not going to fix anything. Okay. So we might as well just not even do it. And then it's going to make me sad. Okay. And you don't want me to be sad. All righty. Whew, let's take a break. Let me catch my breath. If anybody has a comment or question, go ahead. Put it in the chat. Tell me what you're thinking or feeling, or if there's something you want to know that I have not talked about. I think a lot of times when people think, oh, homebuyer webinar, that it's like just, it's just all roses and you're just gonna, I want to buy a house. Okay, here's the money. Go under contract and buy it. Right? It can be a simple process. It could be a fast process. It could take 2 weeks. It could take 2 years. Right? But for the average client that I work with, especially my workforce clients, moderate to potentially low income, we got work to do. Okay. And that's why I do this class, because I'm talking to those people who need to know all of these things. If you already knew all of this stuff, then fine, great. Your process will, you skip ahead of the line, right? But a lot of us who don't already have their ducks in a row and need this information, it's critical for you to have it as early in the process as possible. Okay. All right. So, what is the fifth mistake that first time home buyers typically make? Once you gotten pre approved, you're under contract, and I'm like, hey, okay, I'm recommending an inspection. You're like, ooh, that costs $800. No, remember, we already talked about this when we talked about the upfront costs. Okay. We talked about this in the beginning. We were already prepared. We budgeted for this. Okay. So, we're not skipping it, even though you could if you want to, but I'm going to, one, plead with you not to, and two, I'm going to have you sign a document saying that I recommend it and you chose not to do it. Okay. Because I don't want to see you on the internet, on TikTok, with your sad story about my agent didn't tell me to get an inspection and this happened. That will not be me. Okay. Don't skip it. It's important. And there's many reasons why it's important. And it's not necessarily just for the reason of trying to get the seller to fix stuff, because one thing you need to know is they're not required to fix anything. They could say no, and then guess what you can do? Not buy the house. All right. So it's not for the sole purpose, but one, it does give us a second negotiation period. It allows us to go back to the negotiating table to say, hey, when we signed up for this, when we first went under the contract, we had this expectation. Now we have this inspection report, and now we have a different expectation. We need to have a conversation. Okay. But we need the information from this report in order to have this conversation. If you do not, if you skip it, you purchase a house unaware of deal breakers. You don't know what potentially is going to happen. Okay. You lose your negotiating power on that second negotiating. Maybe we could get more seller concession. Maybe we can get them to make the repair or replace the thing, right? We can ask, we can advocate for that, because one, if they don't do it, they got to tell the next person, hey, this deal fell apart because XYZ is wrong with the house and we didn't fix it. And now it might make it harder for them to get another buyer, but they might as well just fix it for you, right? So it does give us leverage having this piece of paper, right? This report, I should say. It gives us leverage, right, to renegotiate. And we may have to meet them in the middle. They may, you may have to come down and they come up. Maybe they take care of the whole thing, or maybe you say, okay, they're not in the position to do it. I'm okay with that. I still want the house and I want to move forward. Okay. You risk inheriting non-structural safety issues such as mold, radon, carbon monoxide, right? So these are additional inspections. So you have your base inspection that inspects the structure, right? And then you have your secondary items that you can add on. It's like a menu of services, right? Do we need to get a mold test? Do we need to check for radon? Do we need to check for carbon monoxide, right? Are there any safety issues with this house? And then you miss having a forecast of future repairs. This one right here is a very important one. So a lot of times when I see people who have like horror stories that they want to blame, it's the agent's fault, it's the inspector's fault, it's everybody's fault except their fault. But they may have skipped the inspection, or they didn't properly prioritize the things that the seller would not repair when they moved into the house. They knew that those things were looming out there, but they didn't do it. They didn't address it, and then it becomes an issue, right? Well, you miss the opportunity of having your own honey-do list. Okay, I still love this house and I want it, and I know these 10 things need to be addressed. How important are these 10 things? How do I prioritize these 10 things, right? And then what is my timeline of getting them addressed? Is this something that I need to do within the first 30 days, the first 6 months? I need to do this within a year. Maybe I got a little bit more time on this one. I'm going to reprioritize, right? Maybe I'm not going to get that fence right now because I need to fix this thing, right? Maybe I'm not going to get this new furniture set because I need to fix this thing, and getting the house is more important. The inspection report gives you the opportunity to prioritize and forecast on your future repairs. Okay? Then you're oblivious to illegal no code additions and remodels and things like that, right? There's some things that are uncovered during the inspection. But let me take a sip of something and say this: inspection reports basically give you, this is a good analogy. I just started using this recently. Consider the inspection report like the Carfax report. When you buy a used car, right? You get the Carfax and it tells you all the things, right? When you buy a new car, they give you a report and it's kind of like a health report, and it tells you all the things that you get because you bought something new, the warranties and such, right? So you're either going to have the Carfax report with all the things that may have happened over the time, depending on how old the house is, or you're going to get warranty information and maintenance information from the builder about a new construction house. Okay? So the inspection report is your Carfax, your house facts report. I'm gonna trademark that, so don't steal it. Okay. Whoever's watching this video, that's mine. All right. So it's your house facts. Okay. And that information helps you, one, like we talked about, that second negotiation, and two, it helps you forecast future repairs. But the inspector isn't a plumber, they're not an electrician, they're not a structural engineer, they are not a roofer, they are not all the things. So they have the skill and expertise to identify things that they mostly can see with their eyes. They don't have x-ray vision, so they're not looking through the walls to see the wires, right? They're not looking through the walls or through the ground to see the plumbing. They are identifying things that they are trained to see and test that may have a red flag that they're then going to say, hey, these are all the things that could be an issue. And maybe the degree of the issue, is it cosmetic? Is it safety? Is it a hazard? Is it structural? What is it? But now I recommend that you consult a licensed XYZ. Notice this with the electrical. I recommend that you contact a licensed electrician for further evaluation. This is the part where most buyers skip, and then they go on the internet telling everybody, the inspector didn't tell me, my agent, and blah blah blah. They did it. They didn't skip it. They got the report. And it said, consult a HVAC technician, consult a plumber, consult this person, consult a window expert, a chimney expert, well, septic, whatever it was. And they're like, oh, I'm not doing that because that's extra money, right? They're giving you that information so that you can make an informed decision on what you want to do and how you want to move forward. So that's where the re-inspections come in, right? You may need to have a second inspection, or you may have gotten an item fixed that now you need to have re-inspected. So this is why I try to tell people to have as much money as you can on the front end, because we really don't want to skip these things. And sometimes people are in the position of skipping them, not necessarily because they want to, but because they're really tight on funds. Okay. Especially the big things. If they're minor things and you're like, I know I can address this on my own, but if it's something like a structural or a system, electrical, plumbing, we don't want to mess with electricity, and we don't want to mess with water or structure, right? We want to know, are those things safe or are they in need of immediate repair? So I would just say, don't rely just on the inspection report. You still also have to take things maybe to a second level of getting a licensed credentialed person to then also evaluate the thing. And so if they recommend it, I recommend that you actually do it and not skip those recommendations, because we can't come back and blame everything on the inspector because they didn't know that there was something wrong with the plumbing that was in the wall that they could not see. But they said, something doesn't seem right about this. I think you should get a plumber. Okay. Um, so hopefully that clears that up. Alrighty, skipping the HOA document review. Alrighty. This is something people like, I don't want to live in an HOA. Well, if you're going to be in a subdivision in a neighborhood, even if it's in a rural area, you probably going to have HOA. That's just how it is in our area. A lot of neighborhoods, communities have HOAs. Why don't you want to live in HOA? What is it specifically that is a deal breaker for you? The only way you're going to know is if you love the house and it has a HOA, read the documents and say, hey, Connie, hey, agent so and so, this is a deal breaker for me pertaining to a restriction or a guideline or a rule with the neighborhood that I move into. So now we need to make sure that that thing isn't in the HOA document so that you can make an informed decision about whether or not you want to move forward and move in this neighborhood. It's not my job to know every single thing that would be a deal breaker for you just because have a crystal ball. You actually have to tell me. And we have to go read it. We, not me, we. You're buying the house, okay? So we have to be responsible for the decisions that we make. And you cannot make informed decisions if you don't have the information. So don't rely on someone to feed information to you. A lot of times people don't even read the documents that they sign. You want to make sure that you read and that you understand. And if you have questions, you ask the right questions. Or your agent can also help you, like, even know what questions to ask. Like, hey, what is it about a HOA that bothers you? We talk about that and then we say, okay, we know that most of the homes that are in your price range in the area we want to live more than likely have an HOA. So that's something that we're going to have to pay special attention to, that because of X, this would make this community a deal breaker for you. Okay? So we need to read the documents. Alrighty. So now we have come around the mountain. We talked about a lot of things, but now I actually want to break this down, right? Um, into a more concise cycle process, because all of that stuff that I said might feel like a lot. It might feel overwhelming. It might even feel like too much information. But the thing is, and the reason why I share this is because I've done it enough to know the areas where people struggle. And I've done enough to know that sometimes when people come to me on the back end, whether they've been somewhere else and they find out things that they didn't know, right? That they're disappointed that they didn't know. So I'm trying to give you enough information to have a general overview, right? So that they could plant the seed and then maybe you can ask the appropriate questions that are important to you. But when we talk about buying a house, it is an exciting, fun process. And it can be easy. It can actually go really quickly. And even if it takes 6 months to a year, that time actually goes by quickly as well. So, the first step, just breaking it down into making it just a clear, complete cycle, right? You make the decision you want to buy a house, you partner with a real estate professional, you have your initial consultation, you enter into an agency agreement, you get pre qualified, you get pre approved. Once you have your pre approval letter, and we know what the budget is, because you got to have your pre approval letter, what you qualify for, and then what's the budget. They may not be the same number, okay? Then we search for houses. Yay, fun time. We're searching for houses. You find a house that you like, whether it's new construction or resale. We're going to make an offer or we're going to go under contract with the builder. Okay. Our offer gets accepted. And then now we are in our due diligence period on a resale. With the builder, maybe we're waiting for the house to be finished being built. But we still have our period of time where we can have our inspections. We can go over the house with a fine tooth comb to make sure it is really a house we want to buy. And then we negotiate that process. I'm sorry, we don't do the inspections before we actually go under contract, but you make an offer, right? If that offer is accepted, you go under contract, then you're in your due diligence period. Remember, you get your second chance to negotiate, right? So for the repairs based on the report, if you get an inspection, or when, I shouldn't say if, you're in escrow right now. So basically, everything that you're doing from the point of where you go under contract is to finalize the financing. You got to, and we're going to do our due diligence, right? And we're going to finalize the financing. So now you're spending a lot of time with the lender, right? You and I are doing our inspections and we're negotiating repairs, and the lender's asking you for all the documents. Maybe the housing counseling agency is asking you for all of the documents, right? You're going to go into underwriting, you're going to get your clear to close, and then so those final details, and then we're going to prepare for closing. Then we're going to go to closing, and you're going to sign all the papers, and you're going to get the keys to your house, and we're going to have a party. Okay? This timeline can take, if for whatever reason there's a pinch, there's some lenders that can do it real fast in 2 weeks maybe, but typically on average 30 to 45 days. If you're getting down payment assistance, 45 to 60 days. If the house is not is not finished being built, then maybe we have to wait until the house is finished being built, whatever that timeline is. But in general, this process can take anywhere from 21 days to about 60 days, right? From beginning to end, depending upon your situation and if you are or are not getting down payment assistance. That's it. That's the home buying process right here. But you have to get to this point, right? So a lot of the work that we have to do on the front end makes this part go really smoothly. If we don't pay special attention to all the other things that we talked about in the beginning up until this point, then this process can really be a struggle bus situation. And I'm not getting on the struggle bus with you, okay? I don't ride the struggle bus. We want to do it right. We want to have low stress, and we want this to be a fun, exciting experience, okay? So that is the home buying process. All right. So there's the beginning, there's the middle, and there's the end. Does anyone have any questions? There's a couple more things. It is 8:37. This webinar typically takes an hour and a half, so making really good timing. This is your chance to put any questions in the chat. Anything you want to ask me, feel free to either unmute yourself or put it in the chat, and I'm going to talk to you about a couple of things. One, I want you to remember that you can book a one-on-one with me, and it goes right to my calendar. And you can click that link, carolinahomebuyerclass.com/book. That's a one-on-one conversation. That doesn't mean that we're going to, become a team. It means that we're going to talk further one-on-one and get to know each other a little bit better, so that we can both decide if we are each other's jam and if we want to be booed up. All right, and then we have the rewards program for you to get your free FICO 4. Okay, I know you probably have Credit Karma or whatever it is that you have, but I want you to go to my website and join. The only way you can sign up is on your phone. Put in your phone number, and it's going to text you a unique code. You cannot set a username and password for this account. And every single time you log in, you have to log in through your phone number and get the code, and you put the code in, and that's the only way you can access your account. If you become a client, you can sign up for my rewards program. And then if you just want to get your free FICO 4 credit report, feel free to do that. I ask my potential clients that if we are having a consultation, that they send me the PDF of the report so we can go over it together when we meet, if that's something that they feel comfortable with once we have our conversation, right? We already have decided that we're going to be working together, and then you share the report with me, and then we talk about next steps. All right, so you're going to go to incrediblerewards.com. This program, the way it works, is free. Okay, it doesn't cost you anything. You can get your free FICO 4, your credit report, earn rewards, and you can save money at closing because you redeem your points for money at closing. The only time you cannot redeem your points for the money is if for some reason you maxed out on the amount of concessions your loan will allow. I don't know if you remember this or not, but earlier when I was talking about FHA and I said the seller can contribute 6%, or if you're getting 6%, you can't get more money on top of that. The loan will not allow it. So it depends. Most instances, you probably are not getting 6. You can redeem your points and it will be okay. But that's the only reason why I wouldn't redeem your points, is because I can't, not because I don't want to. Okay. All right, you can get 5% back on rent payment. So if this is really great if you're a renter. If you are in a lease and you got 6 months, 9 months left on your lease, this is how you get the most points. You put in your lease information, like your how much you pay for rent and the expiration date. You don't have to actually upload a lease. It's the honor system, so don't lie, okay? And you get 5% of that in points. And there's other little things that you can do in the rewards program that allows you to earn points, right? And then of course you get your free credit score and report, and there's some little like tutorials in there about the home buying process, but the main things are the credit report and earning the points so that you can redeem them for money towards your closing costs at closing, right? I can't give you money, but I can contribute towards your closing costs, if that's allowable. And there was one other thing. Oh, there's you can open a savings account with one of the banks that's affiliated with. This is a really great bank, by the way, too, that has a really cool savings program. So you can join that. There are all the little goodies in there that you can sign up for. And this is just an example of how many points you might be able to get depending upon how long you're in the program. And there's also limits depending upon how long and how many points, because obviously I'm not going to give you my whole commission check, right? So within reason, okay? Alrighty. So if you are on a computer and you want to scan my QR code, you can scan it. It'll take you to the site, or just go to incredible-rewards.com to sign up. And of course, again, I am Connie Ward. I was your host for today. I hope that you got a lot of value out of this webinar. And if you have any questions, feel free to reach out to me, to connect with me. Again, if you go to that booking link, this is one of my other booking links. You can go to either one of these, but they go to the same page, the carolinahomebuyerclass.com. Before I got licensed in North Carolina, the name of my class was Homebuyer NC, Homebuyer Class NC, because it was for North Carolina. But now I'm licensed in both states, so it's Carolina Homebuyer Class. But they both go to the same place, and you can book a one-on-one with me there. And thank you, thank you, thank you for attending. And if you know someone who you feel like could benefit from this webinar, please feel free to send them to my carolinahomebuyerclass.com website. They can sign up just like you did. I will update the date on the site for the next class. So after today, if they go to the website, they'll see the date for the next class. And again, feel free to reach out to me anytime if you have questions or if you want to have a chat about something. I am here for you, and good luck on your home buying journey. If it happens that I am not the agent that you add on your team, I'm still rooting for you and hoping the best for you. So I'm going to hang out for a few moments to give you guys a chance to ask me any questions if you so choose before I log off. Feel free if you want to give me any feedback or anything about how you're feeling. I know at the beginning we talk about whether or not you're feeling concerned, confused, overwhelmed, and hopefully if you were feeling any of those things, they have dissipated and you are no longer feeling those things. So let me know in the chat. You are very welcome, Miss Benta. I appreciate you being here today. Thank you so much. Anybody else has anything that they want to share, feel free to share in the chat. I'm checking on YouTube to see if anyone has anything in the chat over there. And I don't see anything. So I'm going to assume that because I did such an amazing job that you don't have any questions because I answered them all. So I'm going to take a sip of something on that. Thank you again. And feel free to log off. And oh, also, you know what? Follow me on social. So at Cake and Real Estate. You can find me pretty much everywhere on all the platforms at Cake and Real Estate. And the reason why my handle is Cake and Real Estate is because one, I love to bake. I love to bake cakes. I give my clients cakes. I always bring cakes to every event. I don't know, I'm obsessed with pound cakes, but pan style pound cakes. And I make all the flavors. So if you become my client, then I will be making a cake for you. And also, it is the kind of underlying philosophy for my business. So, CAKE is also an acronym for credibility, accountability, knowledge, and excellence. And I stand on those principles, no questions asked. That is my philosophy. And that is what the expectations that I've set for myself that I'm always walking in, right? Being a credible person and staying educated on the process and the programs to best assist my clients. So that's very important to me. It's special to me. And it just so happens that it went alongside my cake, the cakes that I like to bake and eat. All right. So if you like cake, then we need to be friends. Alrighty. So you can find me at Cake and Real Estate on Instagram, on Facebook, on TikTok. I'm trying to be present on TikTok, right? You can find me on TikTok and on YouTube. All right, guys. It's been a pleasure chatting with you today, and I will see you hopefully either in our one on one or online. Bye, guys. I always feel like if someone's still on when I'm hanging up, that I'm hanging up on them. So I'm not hanging up on you. Okay. So bye.